This is Reginald Perryman with ReggiesRealEstate.com, and today we have Billy Slobin. We're going to discuss mortgages and financing today in real time during quarantine and lockdown. So, Billy, can you introduce yourself to the people?
Yes, sir, Reggie. Thanks a lot for having me. My name is Coach Billy Slobin. I am a team lead here at Supreme Lending in Farmington Hills. Been in the business for 35 years and love every day of it, even in difficult times.
Oh, yeah. So let's talk about, so people have questions and concerns from both a new consumer and homeowners that are looking to refinance.
Yes.
So I want to kind of discuss those with you, as well as some things that you see going on in the market today.
Yes.
So today is April 14th. We are in the middle of a quarantine lockdown.
Yep.
So what are you seeing? Are people still applying for loans for new purchases?
Yes, they are, Reggie. Probably, today's only Tuesday, and we've probably started 8 or 10 pre-approvals just between yesterday and today.
Okay.
Absolutely.
Yeah, that's good. How would you compare that number to this time last year? What would you say a normal day would look like?
It's probably half of normal volume.
Half of normal?
Right around half. And I would probably attribute that to people being a little reticent to get their ball rolling because they're uncertain of when they're going to be going back to work.
Right. And on the flip side of that, from the real estate side, if there's not a lot of inventory on the market, you don't have a lot of buyers going out to apply.
Yes.
So that may have something to do with it as well.
I think so.
So with the mortgages, so let's talk about new purchasers. Are there any changes or anything that's different from your end as far as what the requirements are to get a loan?
When things got, how they are a few weeks ago, you saw many companies drastically raise their requirements, and Wells Fargo went to 680 right off the bat.
Okay.
Chase Bank over the weekend announced that they were going to 700 and 80% loan to value, 20% down.
All right, so let's back up for our consumers that are not really educated in the mortgage process. When you say 680, that's referring to
a middle credit score required in order to get approved for a mortgage.
Okay, so normally, what was it like prior to this crisis?
Prior to this, we were actually 600 for FHA and probably about 620 for conventional.
Okay.
Now we've gone to 640 on both.
Okay.
640, though, there are probably some situations where 620 could still work. And we're talking, when I say these scores, Reggie, what I'm saying is the middle numerical score of a 3-bureau mortgage credit report. It's probably a great opportunity with you and I here right now to emphasize to the public that Discover, Credit Karma, or the individual services from the bureaus, those are not the scores that are used to determine if one can get a mortgage loan. Those are merely indicators that help consumers understand what direction their credit is trending in.
Okay.
Credit score that is used to determine mortgage eligibility, mortgage pricing, is the middle score numerically. When I say numerically, what I mean is that each person is different. It could be, one person's could be Experian, one's could be TransUnion, one could be Equifax, to happen to be the middle numerical score of their 3 scores that we obtain when we order a mortgage credit report, which is the definitive tool in determining somebody's mortgage eligibility. So to bring it around a little bit, we're still able to do loans at 640. That is higher than it was before the crisis.
Right.
It's very possible some of these will bounce back down. MISHDA financing, down payment assistance, they've held the line at 640, and those are a little bit on pause, but we can do them. We can get pre-approval started. Nobody could close until they're back to work.
Right. Okay. So basically, overall, is that most lenders, whether it's a bank, whether it's a mortgage company, everybody has made some adjustments to their minimum credit score requirements.
That's
right?
correct.
Because
Yes,
the risk in the economy is higher. So if you're lending money, you want to take the less risk when you're doing these loans, right?
That's correct.
Okay, so FHA hasn't changed their down payment requirement, correct?
No, sir. Still 3.5%.
Okay, but on conventional loans, some lenders have changed their down payment requirements from
Yes.
3%, 5%, some, and like you mentioned, some are going as high as 20% down.
Yes.
Okay.
Chase Bank put out a big news article on Sunday saying that for the primary amount of their business, they're going to require 20% down.
Okay.
What we've noticed, Reggie, in putting together some over the last couple days, we've noticed that Desktop Underwriter, which is an automated underwriting engine that's used for conventional FHA and VA, that some conventional loans that might have worked at 3% down a month ago, the computer seems to want 5% down now.
Okay.
So not a terribly drastic change quite yet, and hopefully it doesn't get to that.
Right. So basically, just to kind of give the average consumer that's a buyer understanding, basically what this means is since the economy has had some setbacks recently, the lenders don't want the same thing to happen as before, where they're giving away easy loans, where there is high risk loans. They
Correct.
want the consumer to have good credit and a down payment. But now the credit requirements have increased and the down payment on some loans have increased. That's correct?
That is correct, sir.
Basically, what we're trying to do is find out today from a mortgage perspective how business was and how has it changed and who is it going to affect during this time. So what I'm hearing overall is if you're buying a home, whatever you qualified for before, if you didn't apply, if you're not locked into a rate, there may be some changes into the requirements that are needed.
That's correct.
Increase in minimum down payment, increase in minimum credit score. So if you were looking to buy back in January, and now you're comparing that to April 14th we're at, you're going to need more invested in order to get a mortgage on average.
In many situations, yes.
Okay, so let's talk about homeowners that already have their home and they're looking to refinance. What has changed since before the lockdown and the crisis, and what's currently going on now?
Okay. So we're probably, Reggie, doing anywhere, just in my office here with the 4 guys, we're probably doing 5, 6, 7 refinances every day.
Okay.
A good portion of them are for past clients. The rest of them are for past clients' friends, relatives, coworkers. Really, that is, for the most part, business as usual with a couple of exceptions. We are able, on refinances, to implement appraisals without the appraiser going into the house, as long as the client is not taking cash out of the house. So if they're doing a rate and term refinance where they're just changing the rate, changing the term, but only paying off the existing lien, not taking additional cash out, we're able to get an appraiser to do an exterior appraisal, comps, everything else, but no interior inspection unless there's cash out. So that in these times is helpful to a lot of clients who are certainly very nervous, and rightfully so, about having somebody in their home. if somebody is refinancing and wants to take cash out, we tell them right up front, the appraiser is going to have to come in. We've only had one person, two persons have an issue with that. We told them, we're going to give you the appraiser's phone number. Talk to them about what safety precautions they're taking, because they don't want to get sick either. And in both situations, the homeowner made arrangements to go to the park for an hour.
Right.
So it can all be done. Now, title companies, most of them are closed physically. We are closing refinances every single day, and what's taking place is the closer is taking a sealed package to the client's house, putting it on the porch with gloves on. The homeowner's grabbing it off the porch. They are then initiating a FaceTime call where the closer answers any questions that the homeowner might have. We're closing those one after another very smoothly. People are saving a ton of money. If I may add in right now, it's a great time to refinance. In my 35 years of doing this, we are in the top 2-3% of low rate times ever. Absolutely worth a conversation for anybody. And if they say, well, I bought my house in January, I bought my house in October, I've only been there a year, worth a phone call.
Okay. All right. So basically, so some of the changes that we're seeing in the refinance is that, so the biggest change sounds like is that the appraisers, if the homeowner is just refinancing to pay off their balance, the appraiser does not need to enter the property. That's correct. But if there's cash back, since there's more risk to the lender, the appraiser actually needs to go in. So cash back meaning that if you owe 150 and you're refinancing for 200 because you have 2,000 in equity, correct?
That's correct, sir.
Okay. So let's you mentioned the appraisal situation. So appraisers are still actually out working. According to what you've seen, right? And
yes, sir.
You said your refinance business compared to the same time last year is about the same?
Triple.
Triple? Okay. So
easily.
More people are refinancing now.
Yes, sir.
Is it, you think it's because of the rates or the crisis?
Rates.
Rates? Okay. So they're getting, so people are just being smart with their money.
They are being very smart, yes.
Right. So especially in a crisis, if I can save money on my house payment, that kind of makes sense.
Right. Absolutely. We've got a lot of people who've got a 30-year last year who are now going into a 25-year with the same payment, cutting off time. We've got people going from 30s to 15s. We've got people refinancing from a year or two ago who are FHA going to conventional to get rid of the mortgage insurance. It must be noted that if anybody has an FHA loan since 2013, the mortgage insurance premium is for the life of the loan. Prior to 13, an FHA loan, you could petition to have the PMI, the MIP dropped once you attained 78% loan to value. In 2013, HUD changed that rule. So now, in order to make your monthly MIP go away, you have to refinance out of a FHA into a conventional. And Reggie, we're seeing tons of people do that because the property values from 13 to now have gotten much better.
Right. So the mortgage insurance premium, so probably, I would say probably 90 to 95% or more of FHA borrowers do not know that they can reduce their payment by simply just calling in and telling you, explaining and showing proof that you have this amount of equity in your home. If your loan was prior to 2013, correct?
Correct.
Okay. So what that means is a lot of people purchase homes at in the distressed market when the values were down, and you now have that equity. You could reduce your payment by simply just calling in and getting that mortgage insurance premium removed if it's a loan.
If it's there, the lender, who's your servicer, is going to either ask for a BPO, broker price opinion,
Right.
or a new appraisal.
Right.
Both. I'm not sure what a broker price opinion costs. An appraisal is probably $400. Most people, typically the mortgage insurance is $100 to $200, even higher. You make back your money in 3 months.
Right. Right.
Now, I got to point out and just kind of throw in there that many situations you could kill two birds with one stone by refinancing if you're in the proper condition, because you could both get a lower rate and get rid of your mortgage insurance and maybe go to a shorter term. So it's probably, before you make that call to your lender and get on the hook for the cost of an appraisal, talk to a loan officer. I know some great ones who could guide you, and maybe you could get rid of it. Maybe you could also get a better rate. Maybe you also go down to a 20-year or something else that puts your retirement a little closer.
Right. Yeah, that sounds great. So just overall, what are some of the major changes other than what we discussed? Is there anything else that has changed in the mortgage industry from this time last year to now? So we're comparing April 14th to April 14th. You've already given us, so you said your new purchase loans are down maybe about 50 or 60% or so, roughly?
The thing about that is, Reggie,
Right.
on February 15th,
Right.
we were double the purchase activity than we were the year before.
Right.
Easily.
All right. All right. So February 19 and February 2020, you were up by
double at least.
Okay. But April to April, you're down.
Yep.
But because what I'm hearing in the industry, and this is real estate, title, property management, we were having some increases in activity until the crisis. Those people are still in the market.
Yes.
And it's likely to all come back after lockdown.
You are absolutely, Reggie. I'm going to say this. I have told my guys here that the crazy busyness we've experienced with refinances over the last 4 to 6 weeks, and the craziness that really never backed down December, January, there was no holiday break this year, is good practice, because when the lockdown goes off,
right,
this is going to be the busiest summer in the history of the world for our industry.
Right.
Ever. The whole rest of the year.
Right.
Unbelievable.
I'm seeing that, and I'm hearing that from a lot of real estate professionals, and not just the media, because the people that were in the market and that were active, they're aggressive, and they're all going to come back. You're just going to have a small percentage that are not coming back only because they can't come back.
That's correct. I'll tell you, Reggie, we have so many clients who are pre-approved or on the 20-yard line, working on their pre-approval, fixing their credit, checking in with us constantly, updating us on our docs, getting us the 2019 tax return for their 2-year average. We have got so many people lining up in the starting blocks like the New York Marathon.
So, and I just want to make this clear. Today is April 14th, 2020.
Yes, sir.
And you're saying this. Okay. Just want, because the perception in the outside world is completely different.
No, they're wrong. They can't listen to the media. Listen to us. We're the ones doing it all day, every day. Right. That's correct. So can you talk about a little bit about the mortgage forbearance? Is it a good thing? Is it a bad thing? Or kind of give us your opinion on here. Yes, sir. So the first thing that I want to point out is when the government speaks of forbearance, it's not forgiveness. Forbearance and forgiveness are two different words, and there's some people who don't know that. Okay. Forbearance means postponed. Now, different impacts come from people's words, and I know you understand that. When the government first mentioned forbearance, the first thing that happened was countless Wall Street investors pulled their money out of bonds and made the rates spike up. Rates were at 5% late in March, 5% for about 2 days, because anybody on Wall Street that's spending their good money buying bonds, which drives mortgage rates down, when they get word that somebody told somebody that they don't have to make their mortgage payment, that's not a good investment for them. So many of those investors pulled out, rates popped up, the government jumped in with your money and mine and all the good people out there, bought bonds, drove the rates back down. With the stock market being down like it was, rates should have stayed down anyway, but all the bond investors said, if the government's telling people that they don't have to make their mortgage payments, I'm not going to invest my money in mortgage-backed securities. So that's what happened on the investor side. On the consumer side, here's the best way that I could explain it. So you're a veteran of the industry, and I know between 2006 and 2012 or 13, you heavily involved in REO stuff and short sales and all the stuff that went on. So you know, Reggie, that calling bank A, B, C, D, E, and F to implement a short sale for a seller, you could talk to a different person each time you call in at those banks, and you would get a different story from them each time, and then you would talk to the other banks, in each set of circumstances is unique. The rules were constantly changing. Nothing was etched in stone, and it was very difficult to navigate. Is that all fair?
Yeah.
Okay. The forbearance stuff is identical to the short sale stuff. You're calling a bank that has nowhere near enough people for the 550% increase in phone volume. Wait times 2 minutes to 20 hours. Very few of them offering you the plug in your number and callback option. Very, very, very difficult to navigate. And if you can navigate it, you could talk to somebody the first time, and then the second time you talk to another customer service rep and another, it's going to be extremely difficult. So if you're trying to implement a forbearance, you got to be patient. You got to be polite and sweet. You got to take copious notes, write down every single thing. You got to somehow document everything about what you're trying to do, and be very, very patient. That being said, each bank will handle these differently, Reggie. So in theory, if you have $1,000 mortgage payment, and they're going to tell you, okay, you have a 1-year forbearance, and you've had your home for 1 year, so you got 29 years left. In theory, at the end of the year, you should still have 29 years left, and you're going to pay that $1,000 in year 30, 12 different times, right? Some banks want the forbearance money when the period's over.
Wow.
I've had consumers tell me about that they wanted 12 grand from me as soon as the forbearance is lifted. Well, that's not going to work out very good, and that could happen to people.
So wait a minute. Some banks are saying, so if I miss, say, 4 payments, right? I go into, and I'm behind 4 payments. When several months go past and I'm back,
they want 5 grand.
So they want all of those payments at one lump sum, right?
Plus the month due. Yes, sir.
Plus the month due. Correct.
Yes.
So it's basically a delay in the payments, and
that's all it is.
Either on the back end when your loan restarts, or on the balance or the mortgage. So it increases your term. So if you had 280 payments left, you delayed it for 4 months, you're still going to have 280.
Yes,
payments.
That's correct.
Okay.
Now, if the bank a consumer's trying to get a forbearance from doesn't give them in writing that when the faucet turns back on, you'll just resume making your normal payment, and we're going to add the X amount of payments on the back end. Don't agree to it. Don't do it. Find a different way if there is. And if there isn't, understand that when that bill comes due in 6 months or a year, it's going to put you in an untenable situation.
Right. So basically, it sounds like if you're going to do a forbearance, you need to get everything in writing.
Yes.
And understand what your lender's terms are. And there may be a difference between if you have a FHA loan, how the
Yes.
forbearance is handled, versus a conventional loan or any government-backed loans, correct?
That's correct.
Okay. All right. So that's good stuff, because a lot of people want to know about forbearance and things of that nature in this market, because some people are having a hard time paying their mortgage.
Yes.
Is there any, before we wrap up, is there any advice you want to give to consumers who are looking to buy, homeowners looking to refinance, or realtors that are looking for a good loan rep doing business during this time? What should someone be doing right now?
Well, I would encourage anybody who's a homeowner right now that hasn't refinanced in the last 60 days to reach out to me, Coach Billy Slobin, 248-535-0465. I've got licensed, knowledgeable, friendly loan officers standing by to help you, and we will help you in the evening, and we will help you on the weekend. That's for homeowners. For prospective buyers, the sooner you get the ball rolling on your pre-approval, the sooner the coaching and the guidance begins. You've got to get yourself squared away, because when all this pent-up demand, and there is demand of home buyers who were waiting on a tax refund, we're waiting on a W-2, or we're just waiting on the spring market and their timing, there's going to be a lot of people out there wanting to buy homes this summer once the lockdown is over. And the ones who have the most solid pre-approvals that are thorough, involving providing documents to your loan officer, not just a phone call, a full file, pre-approved, you're going to have the best shot at winning that battle for a home. As far as realtors, first of all, I would tell all realtors, call your clients, call your past. Use this time to step outside of your business. Call everyone you've ever sold a house to. Call everyone you might have ever sold a house to. Someone you didn't sell a house to. Call everybody you know. Make them aware that you're in the business. You're in the business for the long haul. You're not going anywhere. And you're there to help them buy a home.
Pretty much overall, basically, just to kind of sum it up, if you need a forbearance, contact your lender and get into communication, and make sure you get all the details in writing. And you
emailed or mailed to you, not your own notes.
Right. Sounds great. All right, so Billy, we want to thank you for joining us and giving us that great information. And we look forward until next time. So basically, again, what we like to do is give real updates. Again, I'm going to say it again. Today is April 14th, 2020. Billy is still doing a ton of refinances, new purchases. The demand is there, whether you're looking to buy or sell. Real estate is continuing to be active, but the floodgates are going to open once the lockdown is removed, and you're going to see a lot of people dump back into the market all at once.
It's the people who had their shoes tied tightly at the starting line that are going to win the race.
Coming from a true coach.
Yes, sir. Reggie, thanks for having me.
All right. Thanks a lot, Billy.
Yes, sir. Have a great day.
You too.
Take care. Bye-bye.